I think the market has been pleasantly surprised by the lack of any material deterioration in European markets really since the beginning of the year, and the fact now that we do seem to be getting a greater degree of agreement amongst the Greek politicians about a deal now. If we can move towards closure on the Greek issue, I think the events in Spain and Italy over the last couple of months have been moving also in a more favourable direction, that the market feels, at least for the time being, the European crisis has reached a bottom for the time being. Then in a crude market that is still actually fairly tight in fundamental terms, that is going to provide support, because the European situation is still the #1 concern from a macro level for the world economy this year.
I saw OPEC, in fact, reduce their demand by 120,000 barrels a day in their latest monthly report. What do you make of that demand, and could it get worse in the second half of 2012?
Yes, I mean, I think that again will all depend on what goes on in Europe. I mean, for the time being, Europe remains the sick man of the world economically. We, for example, are forecasting 3.2% global growth this year, of which about 60% is coming from Asia, 40% of that being China, 20% from other emerging markets, and about 15 to 17% from the United States. So Europe, at best this year, is going to be flat. We're actually forecasting a small contraction in GDP of 0.5% in the Eurozone this year. I think as long as events do not turn out worse than we're expecting on that front, then there will be fundamental support for crude oil at certainly $110 a barrel. And as I say, the market is tight if global growth remains above 3% for the full year.
I want to talk to you about the subsidies issue. There's some $200 billion a year spent on subsidies overall right now, and you drilled down into Nigeria, where you see subsidies spent of about $8 billion a year, distorting the price to about 40 cents a liter instead of, say, 87 to 90 cents a liter in that market right now. How much is this impacting demand coming from these markets, which is actually pushing up prices to $110 a barrel for North Sea Brent, even higher?
Right. I think, John, this is a very, very serious long-term issue in the crude oil market. If you look at really over the last 10 years, the growth in demand in some of the world's largest exporting countries has been much greater than the growth in demand for crude oil for the world as a whole. The global demand for crude oil increased by about 13% over the last 10 years, from 2000 to 2010. Demand in OPEC countries increased by 56% over the same period. Now, part of that is due to the fact that in OPEC countries there's a faster rate of growth of population than there is in the world as a whole. It's about twice the rate of growth of population for the world as a whole. But nonetheless, the subsidies are clearly having an issue on the rate of growth in domestic consumption in oil, and clearly if more is consumed in the producing countries that then export, there is less available for exports if production is not increasing. And in the world overall since 2005, production of crude oil has stagnated at around 74 million barrels a day. Consumption in the producing countries has been increasing, and therefore global exports of crude oil have been on a downward trajectory since 2005. The world as a whole still has a very healthy appetite for oil, and therefore the price is going up. I think that is a fundamental equation in the global oil market, and subsidies in some of the major producing countries is an important part of the story as to why oil prices keep rising in real terms.